Welcome to TradeTheMBI.com. This is John. This report is for the 28th of December, and you can see that, well, the markets are trying to achieve some degree of parity here. We've had the S&P slightly ahead of the NASDAQ for a while now. We've got to get that narrowed out, and then also the Dow has been way above the rest of them. And so we expected some sideways action that would cause the NQ to be a little bit better off, and cyan below the red, which indicates that we're still in a buy setup configuration. We're still above the ABM yellow, so yes, close to a little overbought, but that can sustain itself for a little while here, even as we watch the additional lines here on our shakeout as they're rising. It's more fuel for the potential upside, and you can see there it is, the NQ slightly ahead of where the S&P was, and so that's creating a little bit more of a evening out, if you want to call it that, an equilibrium. It just creates less arbitrage conditions going through. No question that the Dow is still a monster that has not been tamed yet, as it continues to show real strength. Now you got shorts moving now back below zero. Could see another little breakout move from there. Yes, completely overbought, and so when we do get our retrace, yes, we will fill in a lot of that. But that's not right now. Euro holding up just fine, so that's actually adding some stability and comfort to it. So that you didn't get a breakdown means that it's not going to kill S&P earnings, which is always a good sign. Bonds, again, heading towards my 113 target there. It's been a long road, but, short this from all the way up at the 141. It's just been a collective, keep adding to the short setup. No question about it. USO, the upper side of the range, which is very healthy for economics. A lot of these things bode well. And there we get a little bit of support back in for gold. No real short activity per se taking place in gold now. And I think that what we've started to see was a bunch of accumulation taking place as we've seen the extreme histogram rising steadily here. It's getting dangerously close to getting into that yellow category of potentially overbought, which makes sense right around the short line resistance, which is what, a 109.82 range. We had like a turnaround cover and flip long to the 109.30 range. Minus 37, still problematic for any kind of sustained move. Thought it might get some more improvement from there, but no. Nothing to speak of. So we had the beautiful ES. And it was interesting because we talked about these, this is the test 2 concept in adjusting the ATR for both either stops or profit targets. And in this particular case, we ended up with decent signals. There's no question about that. The problem was that as the signal came through, then you ended up with the changing dynamic as you ended up getting back to oversold and then turned around for the buy signal. And so in that particular case, you've got to be ready to convert with those. And then the shakeout moved positive right over here. That took place just right up slightly above the break-even point there, and then took off. And that's kind of what we were looking for. And then the cyan stayed underneath there. Then we ended up with the simple DOC spread, which had some pretty extreme moves both on orange and steel from a super oversold on back, and then that pretty much was absorbed all the way throughout, and that led to this final little decay. You couldn't get any movement even from that little dip there, and so you ended up with another DOC spread that led to the little pop down, but it got filled back in, and that's where we're at right now. So pretty much like we expected, sideways with slightly up. That's the easiest way to describe it, and that's pretty much where things are at right now. I don't expect that to change, but we've got the 29th and 30th. I think we're going to start to see some end play action, particularly as it comes to the end of the week, as well as the new year. So there's going to have to be a little bit of rotation, people clearing out their books and stuff. So we can look for that, and I think that that's going to be healthy as long as we're continuing to move up. We're going to see those refill, and all in all, I think that that's net positive as they start to tick down towards inauguration, which will be the next major event, and we'll really get a chance to see what the market's going to do at that particular point. Has it all been priced in, or is there significant room to run? I suggest that there's more room to go, but we'll just have to wait and see how the market perceives it, because it's really not about opinions, about where the money's going. And I think the money has decided that things are going to be pro-growth, and that is going to change the dynamic significantly. It's also going to throw a monkey wrench into the Fed, which is going to cause all sorts of consternation and hand-wringing on what to do about where things are going to go. But we've been talking about the potential for rates to increase for some time, but I don't think that there's just that broad capability to do that. And while people are going to talk about it, I think the Fed's going to be hard-pressed to do much more than its lagging quarter point moves every quarter, or maybe even less, because there just isn't there's just a lot of other considerations, budgetary and otherwise. So we'll see how that plays out going forward, but we'll keep an eye on it. And as always, look for me on the Skype chat. Keep posting those charts. Trade well.